Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Paris Rapeseed, Winnipeg Canola, and Malaysian palm oil.
Paris Rapeseed. The market's rise since January this year started back actually in August 2024 from the support of the slowly rising long moving average, currently 495 and a quarter, and the 50% absolute Fibonacci line at 445.5. This move higher did not happen all at once, but during most of August and into the first half of September. In the process, prices formed a not very pretty looking reverse head and shoulders pattern, with a fairly flat neckline currently at 478.5, highlighted in bright green on my daily chart. This is important as it recently started to come back into the frame after the changeover gap lower at the end of January. Anyway, 21 weeks ago, the prices broke higher over this neckline and the last of the moving averages, reaching both the primary and secondary topside targets for the reverse head and shoulders pattern soon after. In the process, the market created a mid-August based expanding wedge pattern that soon morphed into a bull channel and saw prices run up within this pattern until mid-November, where they peaked at the March 2023 high of 540 3/4. The turn lower was quite dramatic, with a gapping move lower and a drop finally halted by the rising mauve medium moving average, which is currently at 513 even. This is also now important as it sits not too far above the current market. Anyway, the subsequent recovery higher stopped short of the previous November 2024 high, peaking in early December 2024. The following pullback lower was also not to the extent of the earlier late November fall, thus giving some ammunition for a fresh attempt higher. Now in reality, whilst we made new higher prices, the closes this past January did not match the move, closing once again below the March 23 high of 540 3/4. All the time it tried higher. All this action brought to my mind again my comments from 10 weeks ago when I said, and I quote, "All this raises the question as to whether the action since mid-September, especially since mid-November, is a double top, in formation, or a bullish halfway hesitation." End of quote. Well, the peak in January, it turned out to be neither of these scenarios, but instead a triple top, with the January high itself being a horn top. 3 weeks ago, prices were once again held up by the mauve medium moving average, but with changeover we had a big gap lower, originally 490 even to 509 3/4. This is not the largest gap lower I've seen here in this market, but it was a useful enough one such that prices opened after it below the gold long moving average, currently at 495 1/4, and even below two important supports: the significant dark blue February 2024 to date uptrend, currently at 490 even, and the purple extension, currently 484.5, of the April to August 2024 head and shoulders top, plus just above the previously mentioned bright green neckline extension. Since then, prices have recovered and tried to fill in the large gap overhead, which they very nearly have done, especially after this week's move above the gold long moving average. However, further up though, we had congestion at the July 2021 low at 497.5, which the market has seemingly overcome. Then still at 501, which we're overcoming, 504 3/4, and 506 before the gap can finally be filled. However, whilst there has been pressure to fill the changeover gap topside, there's also some bearish pressure emerging and likely engaging with the market. Notably, what we have finally constructed between October 24 to February 2025, and that is a triple top. This pattern, though not a very pretty one, does give some potential targets below. The primary target down at 480 even, and a secondary harder to reach target X1 down at 458 even. Now the move lower 2 weeks ago, down to 481 3/4, had just about reached the primary target, down at 480 even, enough for me to consider it reached. However, the secondary harder to reach target X1 down at 458, well, that is now far enough below for me to start considering retiring it completely. It seems the competing forces of gap filling and triple top are coming to a resolution with each other. Winnipeg Canola. Between late July to late October, last year, the market created a reverse head and shoulders pattern. 13 weeks ago, I said about this pattern how I was, and I quote, waiting in the wings should the neckline be broken, properly broken, at which time I will likely lay out fresh targets for this new, currently potential, reverse head and shoulders pattern. End of quote. Well, we tested the neckline, which is currently at 699.5, throughout late October and early to mid-November, until the patience with those who saw this pattern, which is me included, and were waiting for a break higher, well, patience finally dried up and the market turned and broke down through the key long-moving average, currently at 631.5, triggering a big move lower, all the way down to lows in late November 2024 that were also seen in February and August 2024 between 571.90 and 575 even, with the ultimate outcome of a monthly key reversal down for November. However, the market did not follow on lower following this pattern. No doubt buoyed by the congestion we saw in February, August and September last year, then back in November and December 2020 at 575 even and 571.80 plus December 2020 low at 567. Since then, prices started a 3 steps up and 2 steps down action, gradually moving higher for a while. Actually for a while seemingly halted by the long moving average, but then breaking higher in mid-January. And 2 weeks ago utilizing the long moving average, amongst others, as a springboard for yet a further move higher. This action left us with 3 significant features on this market, one of which I had previously mentioned, and one that came to a cusp 2 weeks ago. So, 8 weeks ago, I said the following, and I quote, the newly drawn middle time, that's currently at 652 even, of the bullish shift pitch hawk with the same move as the bullish Andrews pitch hawk. Now, end of quote. Now, this dark blue highlighted bullish shift pitch hawk is for the mid-September to late November 2024 move, and the market had become closely associated with the middle time, finally move away higher from it these past 2 weeks. The second feature to note, and is an important one, is that since mid-December last year, the market has formed an ascending wedge pattern, currently 645.80 to 678.70. Now, I've highlighted this pattern in bright green on my daily chart, as it's still very valid today, with prices testing the upper trend line. It is too early to give potential targets topside for this, even just topside potentials for a break higher out of the pattern. But I am keeping a close eye on it. Finally, and this is the pattern that came to a cusp 2 weeks ago, prompting the latest attempts higher, and that is the weekly key reversal up we saw. We have satisfactorily followed on higher from this pattern last week and this week, though obviously halted by the bright green upper trend line of the ascending wedge pattern. Nevertheless, it is a pattern that is still worthy of noting. Bursa Malaysia crude palm oil. I said here 19 weeks ago, and I quote, of all the oil seeds and veg oils, palm oil has been the toughest to decipher in recent days. There has been a lot of activity, and the changeover gaps, most notably in mid-September, have been a great hindrance. However, there have been 2, possibly 3 patterns here that have influenced the market and seem to have captured it somewhat. At least since April, and that's the end of the quote. So things have developed since then, but a good place to start looking is at those patterns highlighted so many weeks ago. The first of these patterns was the broken upper time, currently at 36.01, of the old August to November 2022 bearish shift pitch hawk. I know that it is way lower, well below the current market, but the upper time had acted in the past as a declining support. So I'm just keeping a wary eye on it and the thought and image of it just in the back of my mind, just in case. The second pattern is the bright red neckline, currently 44.15 of the September to November 2023 reverse head and shoulders pattern, which I've highlighted repeatedly, which even 2 weeks ago was affecting the market, acting then as a support. Additionally, and this one I also added last time and many times previously, is the dark blue neckline, currently at 44.53 of the September 2015 to November 2017 head and shoulders top. I have not been sure about this one in the past, but as it is an old one, a super old one, that had been way below the current market, but has in recent times become significant, so I'd still bear it in mind. The third pattern here is the very slowly rising long moving average, currently at 42.88. That stopped the market falls dead in mid-January and has truly acted as a base for the rise in prices we have seen since. Now, there are other, newer and closer to the market features to watch out for. And I'll talk about these, and to start with, I'd look to how the market has waded up through a wide congestion zone between 44.08 to 45.59 over the mauve medium moving average, which is currently at 46.49, and as recently as this past Monday acted as a base for an attempt higher. Now, within this congestion zone below, we have the old March 2008 previous all-time high at 44.84, as well as the April 2024 high at 45.27 and the June 2027 low at 45.59. I previously suspected the slowly rising mauve medium moving average might be one to watch. However, this has not proved to be true. Next, last week I outlined the mid-August 2024 to mid-January 2025 bullish Andrews pitchfork, today highlighted in bright green on my daily chart. It is still very much a nascent pattern, only being 5 weeks old, but I think it is worth considering. However, I would finesse it or morph it in a heartbeat to a shallower bullish shift pitchfork, or even retire it completely if I thought it appropriate. Right now we're in between the overhead middle time, currently at 51.66, and the lower time below, currently at 44.56. Finally, a new pattern has possibly emerged, and this is very much dependent on two things. Firstly, this is something I see on my daily continuous charts, so if you disagree with that parameter, well, you won't like this or what I say about it. And secondly, last week and this week's actions so far have helped draw this possible pattern. It would not have existed without those actions. It is a 2025 based possible reverse head and shoulder bottom with a possible purple highlighted neckline, currently at 48.31. We have not as yet broken higher, through the neckline, but we have just about completed all other constructions associated with it. So please pay special attention to that purple neckline for at least a week or two ahead. I should also add this small addendum, and it is a small one, as I just noticed it before I started speaking. And that is, we are close to making a weekly key reversal here this week. It all depends on whether or not prices make higher highs than last week. And that is actually my final point here.
Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.